Hey, what's up, guys? How's the volume? Sound okay? Am I too loud? Am I too quiet? Let me get this thing right up in my mouth. We'll get started here. Got some interesting stuff happening right now. You guys tell me before we get started. Is the volume okay? Good? Cool. Oh, this is not the right one. BTC USD. Let's go Bitfinex. All right, so let's go ahead and start off like we always do by zooming out, and I'll clean a lot of this shit up. So we'll get rid of B bands, and let's just go ahead and clear everything off, and then we'll look inward. So slightly more bearish news than what I was actually expecting. We can see right off the bat, we rejected the 50 EMA here. This is the daily candles. We rejected the 50 EMA right here. Rejected it with a big ass reversal doji. So let's go ahead and zoom in on that a little bit. So 50, I'm sorry, not the 50, the 200 EMA, Jesus. Okay, so here's the 50 EMA. Here's the 200 EMA. And so what that means basically is that the long-term trend, the 200 EMA, this guy, is providing resistance, which is not good. What we would have liked to see if we were going to make a bullish case was a bounce, a push above, and finding support on this guy right here. And we didn't see it. So where does that leave us? Well, it leads us to lean slightly less toward the accumulation phase that I outlined in the last stream. So if you watched the last stream, we were here-ish, and I was saying we're going to bounce a little bit, and I was actually expecting to see the market move up to this price level, or I wanted to see the price move up to this level for it to be an accumulation. But what's so special about this level and finding resistance here is this actually puts us in a last point of supply scenario. So if you remember from the stream last week, last point of supply is part of the anatomy of a distribution trading range, this being distribution, or you can say redistribution. It's all this stuff in here. This is a last point of supply, LPSY. This is now a last point of supply. I say this is now because it's very clear that we found resistance where we broke out from the previous last point of supply. So we see last point of supply here. We see a midline here. This is really the breakout right here. And we found resistance on it right there. And that's not good. So it stands to reason that we're going to see a continuation of the downtrend. And we're just now starting to see the beginning of the further move downward to ultimately, if it gets enough steam, we're going to see a lower low in this region down here. So let's go ahead and look at the anatomy of this trading range here. Okay, so I got a lot of stuff on here, but I promise it'll make sense here in a second. So here is, this is the full view of everything, okay? So you can see clearly from what I was expecting. Let's make this black now. I was expecting to see a test of this range right in here, which we did not. We rejected it immediately. So that's not good. If you're looking at it from a macro perspective, like maybe these are actually daily candles or something, then this distribution makes this a last point of supply. So we got to think about it in terms of multiple time scales. So we can, there's like 3 different time scales we're looking at. We're looking at the daily candles. So 1 day, the 6 hour, and then maybe the 1 hour. We can make an argument there. So on the 1 day, the 1 day candles, so 1 day, we're seeing a continuation of the markdown here. Continuation of the markdown, right? So no higher highs, lower lows, and the fact that we didn't rally to make a new high here or even come close to testing this, it's not good. We didn't even come close to testing this right now. It's still a little early. We could potentially see a breakout, but what we're really seeing here is sorry, I just wanted to get rid of that. We're seeing a continuation of the downtrend at the moment. And what I was speculating on the last stream was that you see this green box here. I said potential accumulation phase, and what would have really pushed me toward a potential accumulation phase was if we saw a move farther north. It's still early. Like we could see, there's an argument to be made that this is an inverted head and shoulders kind of thing. But it's leaning bearish at the moment, right? Because it rejected the daily 200 EMA, and that's a huge statement. And it's well confined within this. So pay attention to this dotted channel as we zoom in. This guy, it's really well confined in here, which makes this you can kind of see this. This actually says distribution trading range. There's a nested distribution trading range in here that's seeing markdown now, right? So that would make this, right, last point of supply, and then again last point of supply, and it's marked very clearly by an upper and lower boundary here. This, of course, being the supply line, and this being the demand line. So let's zoom in a little closer and take a little looky-poo. So this is going to start getting clustered here in a second. Let's clear off some stuff. So you can see here I have a few notes. I can get rid of that. Let's get rid of, we'll leave this ST here. Can we get rid of this red fib set? No, the red fib set's still relevant. This is all still relevant. Okay, sorry. It's just going to be a little messy. I'll get rid of the EMAs though. That cleans it up a little bit. Okay. So very clearly, redistribution. So within the scheme, within the context of the macro market, the 1 day candles, this is redistribution. Within the context of the 6 hour candles, maybe even 2 hour candles, this is just distribution. And now we're seeing the continuation of the downtrend, right? So where does that leave us? We have yet to retest this supply channel here. We don't necessarily have to test it, but we see a very clear test here and here before it moved down. And currently we're bouncing off this fib right here, this 23 fib. And this is the fib set from the up thrust to the lowest low. And we saw it rejected the 38, came down, bounced off the 23, and now it's kind of just like in this feeling out kind of phase. Because on the lower time frames, as we zoom into like the 30, for example, it's making this like head and shoulders kind of thing, which is not looking good. So the fact that we broke downward out of this bull pennant, not good, right? We're seeing an injection of sell volume here on the rejection of the bull pennant, which indicates that there's still an abundance of supply here. We see, you know, a reaccumulation phase, but this reaccumulation led straight into distribution, and that was something I wasn't even expecting that. And I'm like one of the most bearish people on Twitter, and I wasn't even expecting this. I was expecting this again to rally up to like here before we see any sort of distribution, and it fell short. So at the moment, on an even lower time frame, we're seeing a rejection of a bull pennant. So as we look a little closer, right? So here's the distribution trading range, and marked down, had a nice little bear pennant here, and I found a bottom, had a really strong bounce, but I suspect this is nothing more than a stop loss, a stop run. You see very clearly that we have yet to make a new high here, which is characteristic of a stop run, and we're actually beginning to retrace the breakout of this pennant here. So it's not looking too good. The one thing that the bulls do have going for them is this potential inverse head and shoulders here. So that might be the saving grace. But if we break below this 23, that coincides with another strong level of resistance. I'm sorry, support. So keep an eye out here for this level. Here and here. Because there is an argument to be made that there's this, like an inverted head and shoulders kind of thing. Here, here, and here. So keep an eye out on this current price level. But if we drop below this, I suspect we're going to see a continuation of the downtrend and ultimately a push below this. One important thing to note too, is one thing that's really characteristic of last point of supplies is we rarely retrace above the breakout. So we see clearly here the breakout of this last point of supply, this little bear pennant, bear flag, whatever you want to call it. It was a redistribution trading range, but we see here that we found perfect resistance right on the breakout here, and it ultimately turned back down. So stands to reason that this is also last point of supply. This is the fact that it rejected this is quite bearish, both micro and macro. Because again, this coincided with the 200 EMA on the daily, and it coincides with the breakout of the last point of supply. So I actually don't think this is anything more than a glorified stop run to just chop up traders. I mean, you see clearly here, there's like a little double bottom kind of thing. You know, it broke out, did a complete retrace of the breakout here. We see, again, I got to harp on this because if we look closer, this is actually the bottom of the previous trading range. And, you know, we did a retest, didn't even make it there. So it didn't even make it there, and it rejected this price level quite readily. But overall volume is still pretty high, right? So what does that mean? That means that there's an abundance of supply in the market, and it's being sold to the public, is one way to interpret that. It's definitely not representative of a buyer's market, just simply because of how choppy and how volatile the market is. I mean, it's just like, you can see it over and over again. It's like, oh, cool, there's a high. Well, we're going to retrace above the high, and we're going to go back down 100% retrace. We're going to go down, oh, retrace, down, 150% retrace. So this whole market is, all this in here is designed to stop out me and you know, mom and dad who are looking to play in the markets. And yeah, so anyway, I probably just rambled on a lot, so let's see some questions if you guys have anything about what I just said, or if you want some clarification. You can change the visibility of the drawing so 4-hour ones do not show up on the 1 day. Yeah, I know. I honestly haven't zoomed out to the 1 day recently, so I just haven't filtered out a lot of my lower time frame drawings. Are you a bear or a bull? I'm neither. I'm a trader. DB bands constricting point to a breakout? got to be more specific. I don't really know what you're asking. How do you pick alts like Storm and ICX in a bear market? You don't. Do you expect a retest of the earlier week high before moving lower? I'm assuming you mean this, maybe? Oh, this. No, I don't think it's going to. Because if you look at it like it's pretty fractally. So we see here, the retest here. Well, same sort of thing here. We broke out of this pennant. It retested the breakout, and I don't think we're going to get much higher than this value right here. I think this is most likely the top of this bounce. So the predicted run to 10.5K failed. Yeah, it's, well, I don't think I ever said 10.5. Did I? If I did, I totally meant to say 9.5. 9.5 is where all the fibs are. Do you ever use Ichimoku in your TA? Yeah. I like to use Ichimoku on the higher time frames. So stuff like the daily and the 7 hour I find to be really useful. It gives you a lot of insight, I feel, especially like, so here's something really interesting. The 3-day looks incredibly bearish, right? So we got the price moving through the 3-day cloud. We got a big fat Kumo. And as we go to something like the weekly, this looks incredibly bad. The fact that this is about to be a bearish twist. So just a little of my rudimentary. Oh, come on. Okay. So we see here, this, god damn it. Okay. Sorry guys, gotta wait for this thing to pull up. Anyway, so we see here that the Kumo is about to do a twist on the weekly, which in isolation isn't the end of the world. Definitely not good, I'll just say that. But what's even worse here is that we see a weak bearish cross where the slow moving average drops below the, the fast moving average drops below the slow moving average, and this in conjunction with this this Kumo twist, it does not look good on the weekly time scale. And of course we're bouncing off the 50 EMA, you know, that's where we bottomed out here, but ultimately we're rejecting the Tinkin, so yeah, not looking good on any time frame. I don't know of any time frame that it looks promising or looks bullish. What little bullish argument I had a couple of days ago is slowly withering away, and it doesn't, I don't like it. Another argument here too. So we see here a squeeze on the 3-day B bands, indicating that, you know, the market's consolidating. So that could lead to a sustained move downward. That's a really strong possibility. We see here the last time the 3-day B band squeeze on something like this, we saw a pop up in price, but ultimately it led to a sustained bear market. I'm not saying that's what's going to happen here, but it's something to keep in mind that, so here's the previous bear market right here. If we were going to draw some sort of similarities between current market and previous market, we would be right here with a nice 3-day squeeze, a test of the previous low, and ultimately just a slow bleed downward. Not saying this part's going to happen. I'm not sold on this happening just yet, but I do think we're going to see a lower low out of this, like a sub 6K low out of this before the end of the day. Not the end, I'm sorry, not literally before the end of the day. I'm saying, but after everything is said and done. Have you started building your short then? Yes, I have. Do you watch major exchanges for Bitcoin inventory changes to predict market moves? No. Gun to your head, bear market over in weeks or months. That's really difficult. I don't know. If I had to lean anyway, like if I had to lean somewhere, I would lean toward weeks rather than months. Actually, I would probably lean toward months, honestly, because of how slow this grind has been and how volatile the market has been. Wouldn't the CO make a move against all the TA? You're saying market is going down. Yeah, of course they do. That's why you see things like double bottom fake outs, inverted head and shoulders fake outs like this, right? Inverted head and shoulders, fails to make a new high, breaks out, breaks down, traps in all these bulls, squeezes them out in here, rinse, repeat. Like this happens over and over again. So that's why I'm saying this little bull pennant, I think this is the highest it's going to go, and ultimately it's going to retrace downward. Yeah, right. Yeah, right as I said that, it dropped down a little bit, and we're seeing a 100% retrace of that move. So. Four-hour Kijun bounce, TK cross, potential edge to edge. Let me see. I don't really look at low time frame Ichimoku stuff. You're saying 4 hour? Come on, what are you doing? There we go. Yep, 4 hour TK cross, bullish twist. Yeah, we bounced right off the Kumo. I'm assuming you're using standard settings, right? What settings are you using? Yeah, this is a weak bullish cross, for sure. It found support on the Kumo, so that's good for, and it found support on the 50 EMA. Crypto settings doubled. Okay, well I don't trade using the doubled settings, so I find the default is just fine. Yeah, look, it 100% retraced the breakout, just like what I was saying. This was a stop run. This was a bull trap. You see here that it just retested the breakout of this thing. That's all that was. That's not crypto settings, that's Josh's settings. Yeah, I mean, I know a lot of people that trade crypto with Ichimoku. Like, even the chaos trader, the guy that a lot of people cite for reference on Ichimoku stuff. Like, he trades standard default stuff. So. Just making a little bullish case doesn't say much against the higher time frame. Yeah, I agree. A little off topic. Why do prices on exchanges stay almost the same? What/who prevents the market from? Okay, so this is a bit newbie, but I'll allow it. Okay, so let's say you're on GDAX and Bitcoin's $10, and you're on Kraken and Bitcoin's $100. There's something called arbitrage, which allows you to buy Bitcoin over here, move it over to Kraken, and sell it for a $90 profit. And because of arbitrage, the prices stay equal, relatively, because otherwise people would be doing this until it finally equalizes. But it's because of arbitrage is the reason. So I understand the target of the CO is everybody lose hope and sell the lowest price. Means it really need time. Yes, that's right. That is due to arbitrage bots. Yeah, arbitrage bots keep everyone in check. And if the bots weren't there, then people would be doing it manually. Longs are at, okay, so this is interesting. Longs are at all-time high levels again. What do you make of that? So the question is about longs. And I have the longs right here. They're at all-time high levels. So what he means is this. So if we look at the trend of the market, you see here that, you know, we're obviously here, but the longs are at a super high level, all-time high level. In fact, it's higher than it was at any point. It's really fucking high. I have a running theory that, you know, me and my trading group have been working on. I'm not sold on it just yet, but it's something to keep in mind. I think that the CO is using longs and shorts to move the market while unloading unmargined supply. So what do I mean by that? Say you have, say you've got 10,000 Bitcoin, right? And it's in a wallet somewhere, right? It's in a wallet. If you have the means to use margin to move the shorts and the longs, you can manipulate the price to control it and get rid of your supply. So the theory is that when the longs go up, the price actually moves down because he sells his long position. And we see it over and over again. So let's zoom in. I'll give you a couple examples here. So look right here. Right? Longs are very high right here. Well, what happens when you close a long position? You sell, right? So we see here a very clear trend of the price moving down up until about here. And the price is moving down with it. But all the way, this is going to get really interesting. So all the way from here to here, we see longs increasing, right? So let's track this again. Look at this point right here. Well, what is the connection between this and this in the market? What's the connection there? Look right here. This is the same price level. Meaning that someone the whole way down and the whole way up is building a long position. And if you're exiting and entering at the exact same spot, that means that your long position is net zero profit. Why does it mean that? Well, if the price goes down and the price goes up, that means any long you open here and any long you open here are equal, right? Any long you open here, they're equal. So everything between here and here was all gathered by the CO under the radar so that he could push the price here, right? So look here. Again, the price rises, longs go up again to the same exact level. And then what happens? Closes all those longs and the price tumbles. Boom. Well, longs are at the same level they were before. Right here, here, and now they're even higher. Well, let's take a look at when he started building this long, right? So he started building it right here and has built it the whole way up. We went down, we went up, and now look, we're at the original price where we started building the long. So it stands to reason I'm expecting to see all these longs close and the market to take a very strong move downward. I hope that made sense. That's my running theory about how the longs and shorts are used to manipulate using margin to get rid of the ultimate supply by the CO. That makes sense to everyone? Because I feel like this is a really important topic that's really, really overlooked by a lot of the market analysts right now. And it's kind of crazy because we can almost imagine what the bankroll of the CEO is. Because we see that the longs get to a certain level every time. Here, here, and here. So we can begin to quantify, you know, like what the extent of this dude's long position is based on the range at which he accumulates, right? Here to here, here to here, here. And now we should probably see, the theory is, right, that we'll see a return to this baseline. The longs here, and once it returns here, we're near a bottom. Right here. We're near a bottom, somewhere down here in price. My guess, somewhere in the 4,000s. I mean, it may be complete bullshit, obviously, right? But, I mean, you can see very clear swings in price here and here, and it's neutral every time. Every time we see these big swings in longs and shorts. I mean, yeah, don't get me wrong. The retail investors, yeah, they're causing all of this turbulence in here, but the overall direction of this stuff is caused by the CEO. I am very convinced by this. I mean, look, longs started building here. I'll give you some visuals here. Boom. Okay, and where was the peak? Here. Or, I'm sorry, wait, that's not right. Somewhere in here, relative price level. So it's very interesting. You can start to like extrapolate. Once you get into like the whole theory of like composite operators moving the market, you can start to develop these like really interesting abstract ideas for how to visualize the market. And so far, I mean, look, like, let's look at the 5-minute time frame here. Look, it just made a bull pennant, and just like I said it's going to make a high and it's going to retrace 100%. It was a stop run. The whole thing's a stop run. My guess is the next thing we do is we make a new low. We're going to break this price level is what I'm guessing right now. CEO equals whales? No. Not just the whales. It's a specific kind of whale, like an institutional investor, like a, you know, like a Goldman Sachs, like a JP Morgan, those kind of guys. Not just a whale, a very fucking smart whale. How do you get those? How do you get the longs and shorts to show up? You can just type it. So you go BTC USD, and it shows Bitfinex longs and shorts. So like a whale with freaking laser beams attached to its head? Yeah, a laser guided whale. And it's really funny because like I've been trying to think of a good way to post this like publicly, and other than like a video, like I haven't found a good way to like actually put this into words, what I'm seeing. So I haven't really been talking about it publicly, but like in my trading community, we've been developing this idea for a little while, of like how to track the actual macro moves of the CEO. And this seems to be a pretty solid candidate, to know when a bottom is in, to know when you're getting bull trapped. And my guess is we're going to see some of these longs start to close, and as they close, market's going to push down. Because we see a very interesting trend. We see really, so check this out. This is what initially, this is really interesting in my opinion. This is what initially sparked this interest. Okay, so what do we see here? right? We see a very strong move down followed by a 100% retracement. But if we look here, what do we see? We see longs open at the exact same time that a stop run happens right here, right? Let's move this down. We see longs open at the exact same time shorts close. So what does that mean? When you close a short and you open a long, price goes up, right? As the price moves down, longs go up. And look, the shorts get opened here. But all the while within this consolidation pattern, it never drops below this like baseline until price drops below it, and then we drop below the baseline. And then of course we see this return here to the relative baseline here. And this is where we see the rally, right? And if we look, it even shows up on higher time scales too. So like, this is when it was most apparent, was in this trading range right here. So, oh no, let me draw. Come on, you piece of shit. Here we go. So we see here, right? Longs go up. Wait, that's not what I'm looking for. Here, this is it right here, right? So we see longs go up, shorts go down, super squeeze, right? It stays here, consolidates in this little pennant thing, and it breaks down, right? Well, what happens during this pennant? We see a large uptick in longs, and then as soon as it breaks this pennant, this whole uptick closes the whole way down, and the price moves down. See it happen again. Price moves up just temporarily, and then he closes it again. So this is an example of when the CO is using margin position to move the market for his non-margin longs. He's using the market, he's using margin position to create liquidity for him to sell his supply. It's really fucking weird, man. And it makes sense. It's like, it's really, I mean, it's genius. It's really fucking smart of them to do that. They're essentially creating their own liquidity. And that is why I suspect why BitMEX took a huge upturn in volume recently. So if we look at BitMEX, oh, I can't pull it up, can I? If we look at BitMEX, BitMEX doesn't have a volume profile like any other exchange right now. BitMEX's volume profile doesn't look like this. It looks like this. Oh, come on. Whoa. BitMEX's volume profile looks like this. It's like a straight up rocket. Like the volume has gone up drastically. And I think that's because the CO is moving over to BitMEX because he gets 100x leverage. Like he's swinging the market with a shitload of money. BitMEX has a very unique volume profile, and I don't think it's from retail investors. I don't think that at all. I think what's happening is the big dudes on Wall Street are saying, dude, you need to short Bitcoin. You need to short Bitcoin. And they're just developing these huge fucking shorts on BitMEX. And also check this out too. 12-hour squeeze right here. My guess is we break down out of that squeeze. Do you guys have any questions about that? I know that is like really fucking meta, and it probably didn't make any sense coming from me, because that's really difficult to explain what I'm trying to say. Gonna watch this one over? Yeah, it's just really difficult to explain. Like it's really difficult to convey what I'm trying to explain. Why do you think it's a potential accumulation if you think that the CO is shorting? So you probably missed the beginning of the stream. I'm starting to lean further away from this accumulation thesis because this looks more like last point of supply now. It didn't make it up to this red zone. Red zone would have given us a hint that it's potential accumulation. This looks more like last point of supply for the macro distribution. I'm leaning away from this now. The fact that we turned here, that's a big deal. That is a very big deal. It's a completely different message for what the CO is doing. So they're opening longs to drive the price up to both close their longs at a higher price and sell their accumulated supply into people FOMOing. Brilliantly worded there. This guy said it better than what I said. So they're using margin longs to drive the price up to both close their longs, right? So if you have supply, if I could draw on the screen, that'd be fucking awesome. They're using their margin longs to drive the price up, spark FOMO, selling into the FOMO, closing their longs, which also sells, and then it drives the price down. It's total manipulation using longs and shorts. But the end goal isn't the long and short game. That's where people are getting confused. They're saying, oh, longs are at an all-time high here. We should go long here. But they're faking left, but they're actually moving right. They're making you look one way, but they're really going the other because what they're doing isn't with margin. It's not margin. They're getting rid of large-scale supply. And that doesn't go detected on margins and margin longs and shorts. So I'll just take this moment to let you guys know about coupon code at the moment. We have a promotional offer for my trading community. It's just coupon code BEARHUG, and you get $50 off your first month membership. If you're interested in hearing this stuff more frequently, I'm always in the trading community, talking about trades, talking about where I think the market's moving. It's the easiest way to get in touch with me. I wish I could respond to everyone on Twitter, but it's just not feasible. And it's also not the most efficient way of communicating. But in the Discord, everyone's talking as a community. We're growing together, and we're coming to a group consensus of where we think the market's moving. So if you're interested in joining the group, go to bitcoinschmitcoin.com and use coupon code BEARHUG. It's a banner up here, posted in the top right corner. It tells you what it is. BEARHUG right there. Boom. Put it in. Get $50 off. Sup BTC? Join the community with the code earlier this week. Super useful. Great. Glad I could help out. Brilliant analysis, man. Your info is always invaluable. Well, thanks, man. I appreciate that. Hi, Schmitcoin. Just tuned in. Do you reckon we're going for a second hard sell-off to 4 to 5K? Thanks for your insight. I'm personally leaning that way. Yeah. There's no code. Do you just get it when you sign up for 3 months? No, there is a code. There's a discount for when you sign up for 3 months, but there's an extra discount for the next month with coupon code BEARHUG. So if you sign up for 3 months and use coupon code BEARHUG, you actually get an entire month off. So you you buy 3, or you pay for 2, but you actually get 3. So it's the deal. The 3-month package was already a discount, and we're adding another discount to it. Thanks. Really love your analysis. Well, thank you. I appreciate that. Yeah, and guys, if you like the videos and you like the content, something that's a really easy way to support the stream is just click like. You can share it, subscribe, and that helps me with the YouTube analytics, and it gets me more people's feeds, makes me more relevant to the cryptocurrency community, and it just helps me out with getting more eyes on my material. So that's one really easy, quick way to support the streams. If you like this kind of stuff, well, that's one easy way to make this possible. Do you guys have any questions about any of the stuff I said? Any of the targets I'm talking about? There is one point that I want to make here. So if you look at the daily, there is a confluence of support. Whatever happens here, so whether we make a new low, we drop well below support, I do find that there's going to be very, very strong support at 4,500. So if you're looking for a Hail Mary buy, that's a great place to start looking. There's a confluence of support from both this macro bull run fib set and the macro bear run fib set. And they're sitting like to the dollar, the exact same amount. I mean, you can see it right here. It's looks like gibberish right here because they're just overlapping so perfectly. So this is going to be a really great level of support. That's where I will start looking. That's where I'll start looking for long-term hold positions there. Is there anything that makes you think this bear market will last less than 2014 and 2015? No. I mean, other than the fact that the last bear market was sparked on the heels of Mt. Gox, I don't see any argument that would suggest that we're just gonna find a bottom and all of a sudden we're in bull mode. It's gonna be a long accumulation phase, and we won't know until we're in it, so that's why I say things like potential accumulation, because all you can do is look at what you're given, and then from there you can say, oh, I see, maybe they're starting to accumulate. And then when things like this happen where it fails to retrace up into my projection and where I'd like to see it, then you lose confidence in this potential accumulation. You say, okay, well, this is actually looking more like a continuation of the downtrend rather than a bottoming out. It just doesn't look good on the daily, on the 3-day, on the weekly especially. So I'm more leaning toward a grinding, horrible, slow bleed to a bottom, and the only thing you can do is update your charts one day at a time, look at the information that you're given, and draw different conclusions from there. Do longer EMAs lead to laggy trends and volatile markets like Bitcoin? Well, longer EMAs, yeah, they lag more. Yes. The term CO means composite operator. The term inherently means it's made up of various operators. Yes, correct. Then if the CO is an interest in selling, we can go lower than 44.50. It depends. You don't know that. It's too early to say that. Are you using MA or EMA? EMA. I'm using EMA. Is Bitcoin correlated to... Okay, this is a great question. Is the Bitcoin trend correlated to the DJI, which is the Dow Jones Industrial Index, or Industrial Average? So I say yes. A lot of people don't want to hear that because they're like, oh, Bitcoin's in its own little asset class. But At the end of the day, the thing that binds all the asset classes together are human beings, right? So if the stock market's shitting its brains out, that's a good indication that the overall health of speculative assets is not doing so hot. So let's actually take a look at the Dow Jones Industrial Index. So Dow Jones, and whoops, let's go to stocks. Industrial. Okay. So if we look at something like the 6 hour. Whoa, why is it oh. So if we look at, oh man, it's still dropping. I haven't looked at it today. Jesus. Look at that thing go, man. It's about to, wow. Okay. Last I checked it was yesterday. I've been really busy today and I didn't get to check it. But so we see here, this is really fucking bearish. So we see here that there's like this pennant symmetrical triangle thing that we just broke out of the bottom of. And it's just slowly bleeding out, and it's coming to test this support level here. But here's the scary thing here, is that this is the big price target. So this is, let's say, 260 up here. This is wait, is that right? Yeah, 260 minus 240 is a $20 move. So the price target from here, from 240, is 226, which is down here. This has a price target down here, which if this comes this far down, we could potentially be on the beginning stages of like a really, really, really bad bear market, like a global bear market. So it makes sense that Bitcoin's bleeding, right? Something very interesting too to note is how similar the moves in Bitcoin look to the Dow Jones. Yeah, it's just, it doesn't look good right now. This looks like it's gonna make a new low, and especially going into the weekend, this is really bad, because if we go this low before close of business, you know, at the tail end of market trading hours, you know, if we make a new low and we close below here, that's going to be a crazy Monday. That's going to be a really crazy Monday. We could see a massive sell-off on Monday come market open. So not looking very good, guys. Just globally, it's just not looking good. Anyway, that's my thoughts. And I suspect that the same CEO that's moving this current market with the stocks is most likely behind the Bitcoin market as well. So, oh cool, my roommate decided to start vacuuming right as I'm doing a stream. That's great. So if you hear a low hum, that's what you're hearing. Anyway, do you guys have any questions about any of this stuff? Sorry to leave you guys off on a bad note, but you guys have any questions about that? All right, well, let's go ahead and wrap this up. Again, you know, if you want to check out the Discord, now's the time to do it. If you sign up for 3 months, you basically get a month free. Use coupon code BearHug. It's in the top right corner. You can see it when it starts cascading across again. But other than that, yeah, not looking too good right now for Bitcoin at the moment. We gotta just play it day by day. That's why I really recommend joining the trading community. Not because it supports me, but because that's the best way to learn the market, is to update it day by day. And especially when it's looking bearish as it is. So go to bitcoinschmitcoin.com. Check out the coupon code BearHug to get $50 off your first month payment. And yeah, I'll try to update you guys on Monday, and you know, take a look at how it's looking then. But for now, it looks like down is the name of the game. So thanks, guys. You guys have a great rest of your weekend, and don't stare at the charts too long. See ya.